I want to show you what I believe is a smarter way to purchase cars and prepare for retirement. And it's going to fly in the face of everything that banks teach us as far as growing our wealth and making major purchases. I built this for a doctor client of mine who wanted to use the money inside of his cash value life insurance plan to purchase a car for his son. And so I've diagrammed out the numbers and want to go through those with you because at the end of the day, I want to help more Americans strengthen their financial situation and be ready for retirement. And right now, we believe that banks are on our side, and they're just not. They're out for themselves, they're making a killing in marginal spread, and now it's time to take back control of our money and the use of our money. No more locking it up. Did you know that the average American will spend more on cars in their lifetime than they will ever save for themselves? Now, you've probably bought cars if you are watching this, and you've probably lost money on every car, and today I want to change that. I want to show you a better way. So this does require being patient and setting up a properly structured cash value life insurance plan. But with that comes guarantees you'll never lose any money, the ability to legally avoid taxes, and the ability to grow your money every single year. That means you're never interrupting the compounding interest calculation on your money. And so I want to go through these numbers. So the car is a $30,000 car at 4.99% interest for 7 years. And when we go through this, you're probably going to say, yeah, this is how I've bought every one of my cars if you've never bought a car in cash, which is a terrible way to buy cars, by the way. But let's go through this. So when we run the calculation, the payment is going to be $424 a month. For 7 years, that's 84 months. So at the end, we're going to pay the bank $35,616. What that is every month you take money out of your pocket and you hand it over to the bank. Two things happen. Number one, you no longer have possession of that money. And number two, you won't see that money again. Okay? So we want to take back control. We want possession of the money, and we want to be able to use that money again. Okay? And not just because we sold the car. Because you're going to see right now that because of interest, but even more because of depreciation, you're going to lose money on cars. It's just the way it goes. But it doesn't have to be that way. So pay attention, okay? So $35,616 is what you've given over to the bank, right? So it was originally $30,000. So the $5,616, that's the interest for the right to borrow somebody else's money. It's expensive to use somebody else's money, so I'm going to show you how to use your own. But after 5 years, you've got 100,000 miles on that car, you've got wear and tear. It's going to be worth about $10,000. So that means two things. That means, unfortunately, you lost $25,616 on this car purchase. But the good news is you've got $10,000 to go towards the purchase of your next car. And right now, the majority of people trading in cars with car dealers are upside down in their loan. So that's a bad thing. That's negatively compounding against you, right? So this is the way that nearly 100% of financed cars are purchased. There are people that buy in cash, and again, in another video, I'll show you why buying your cars in cash is the worst thing that you can do. It's even worse than using a bank. But this is the way that most people buy their car. Now imagine that you have set up your own bank through a properly structured cash value life insurance plan, and you've now got money that you can deploy. That's right, you've got access to your own money, and you can go out and you can use it in the real world for investments, recouping the lost money on major purchases like cars or a washer and dryer or whatever it might be. It's your money. If it's in an IRA or a 401k, it's locked up. You can't have access to your money. If you don't believe me, go try to get some. But with this, we can borrow against that money and have it continue to earn interest as if the money were never gone. Now, when I first heard that almost 12 years ago, my mind was exploding. I was like, wait a minute, how do I earn interest in two places at the same time? With a properly built plan, you can. So let's run through the numbers if you were to be your own bank, okay? We borrow the $30,000, and yes, we are going to pay interest on that, but this is going to continue to earn as if the money were never gone, okay? So now, instead of doing it the traditional way, we're going to do it the smart way. But you're going to notice something. The numbers are about the same. The payment is $424. The time frame, 84 months, is the same. The difference is who has possession of the money, right? So instead of taking money out of your pocket and giving it to the bank, you're going to take money out of your pocket and you're going to stick it in your other pocket, okay? So at the end of the 7 years, you've recouped. You've put that $35,616 back in your own account, okay? Plus, in the real world, you still have a vehicle worth $10,000. You sell that, and if you have the capacity, you dump that back into your insurance contract. If not, you just have it to go towards your next car purchase. But either way, at the end of the 7 years, you have $45,616. Now, answer in the comments below, have you ever seen this before? Has anyone ever shown this to you? And if you already have one of these properly built cash value insurance plans, have you used it for real estate or for a major purchase in your own life? I'd love to hear your story. I've been doing this now for over a decade with my own money. We've done our minivan purchase, my truck, my Jeep. We've done some rental properties. It's just incredible what you can do when you have control and access to your own money. So let me ask you this. This is kind of a dumb question, but at the end of 7 years, would you rather have lost $25,616, or would you rather have access to $45,616? I already know the answer. Now, for most people, this is new, and this is what my best-selling book, Taming Wall Street, covers. And I want to mentor you to having more money in your life. I want to show you how the average American could take one of the biggest expenses in their life and turn it into an asset that will give them more money than the average person during their retirement years. And for my doctor clients and my business owner clients, you can do so many things with this. Equipment purchasing, car leasing, all kinds of things. Owning your own building, owning your own mortgage. There's so many neat things that you can do. And so doctors, business owners, those of you watching this video, I invite you to learn more about this. Who wouldn't want to legally avoid taxes? Who wouldn't want to be guaranteed that you'll never lose on your money? And who wouldn't want to compound their money every single year, even when the money is outside of the plan? Hey, if I can help you, reach out to me at Stephen@yourbridgeplan.com. Otherwise, please subscribe to this video and hit that bell so that you're notified of other great videos and content that I'm putting out. So, do you want to buy the traditional way or the smart way? I leave it up to you, but I'm here to help if I can. Thanks for checking out today's video.